Mag 7's become a little less magnificent because of some of that underperformance. Apple down sharply this year, for instance. So our next guest says it's time to go in a different direction with Cow. He believes that these on your screen are the best in-class retailers right now: Costco, O'Reilly, and Walmart. And they'll provide investors a measure of safety and will outperform over the long term. Let's bring in Michael Lasser. He's equity research analyst at UBS. Michael, you sure O'Reilly gets top billing up there with Costco and Walmart? You know, two of the greatest companies of all time. Welcome.
Thank you, Kelly. Good to be here. It does. These three retailers have a lot in common in that they're sustainable growers, taking market share and generating improving returns. That is why we believe they should be core holdings for those who want to participate in the retail sector. And you are right. We have affectionately referred to them as Cow. That is a moniker that we think is appropriate in light of the qualities that these three retailers hold. And they are going to continue to outperform in good and not so good economic times.
And these are names that are already, I mean, people talk and debate all the time about Costco's valuation. Give us your take on that.
So Costco's valuation is clearly a debate. We believe the premium valuation is warranted, both because of the sound execution that Costco has been able to achieve over the long term. Also, it has some unique qualities, such as a disproportionate amount of its earnings coming from this very visible and predictable revenue stream in the membership fees. Plus, a third of its business comes from the Kirkland Signature brand, its private label. If you were to value that business as a standalone entity, it would account for a significant portion of the value. And it's certainly a differentiator for Costco and drives a significant portion of the premium multiple that it trades at.
Right, which is around 51 times. What's Walmart's multiple these days? I mean, the same kind of issue with them, right? And I guess you could argue that that was true for FANG back in 2015 or something, the original FANG, that I'm sure it wasn't that cheap, but you could go on to experience years of outperformance. It's just that these stocks feel more mature to me.
They are mature, but they're constantly evolving. For example, one of the reasons why Walmart is trading at a premium multiple is because it's really changing its business model, where it is now gaining a disproportionate amount of advertising revenue that's very high margin and creating a profit windfall for the business that it can use to both let fall to the bottom line and let shareholders enjoy those rewards and have an opportunity to reinvest back in the business to continue to drive growth. These are businesses that have unique advantages that are going to be enduring over the long term. And that is why we're referring to Costco, O'Reilly, and Walmart as the cow trade within retail. And we think investors should be on board.